Hello and welcome everybody. It's good morning, good afternoon or good evening, depending on where you are in the world. My name's Steve Sava and from Credit Management Training Limited, who have now transitioned into Class Academy. I'm unique in the sense that I left school wanting to go into credit control. Most people end up there by accident, don't they? And I've been working in credit management now for more than 50 years. And I still look good on it, don't I? I've trained over 8,000 delegates in many countries all over the world. And we've transitioned into Class Academy, who specialize in collaborative learning to include digital, blended learning, virtual coaching, and live courses. We're accredited by NCFE, who are the largest and oldest accreditation body in the UK, and we have international status with them. I would now hand over to our esteemed presenters to present themselves, and we'll start with Anselm.
Hi everyone, so I'm Anselm. I currently am the Director of Underwriting at Checkout.com, a financial technology company that is processing payments for a lot of e-commerce companies around the world. I've been with Checkout for almost 5 years now. Prior to Checkout, I previously worked in banking and also have experience in another FinTech that was a micro lender in the UK. I'm currently based out of the Middle East in the UAE. Having spent some time working between the UAE and Saudi and also the UK over the last few years.
Thank you, Anselm. We'll go over to Pradeep.
Good day. My name is Pradeep Pant. I'm the co-founder and CFO of Go Beyond Digital. I've been in this region for 20 years now. I've worked in different sectors, from capital markets to logistics to technology-driven organizations. Go Beyond is a tech startup, has two key dimensions. The first one is working with customers in their digital strategy. And the second one, what we focus on is creating a platform for trade compliance and risk. We empower organizations to have 360 view of their counterparties, from KYC to sanction screening to ESG, financial risk, and payments. So what we do is basically harness technology, people, and process to help companies manage their counterparty risk. Thank you.
Thank you. Charanjeet?
Yeah, hi. So I have worked in banking sector for almost 25 years in India, Africa, and UAE. My last employment was with First Abu Dhabi Bank as head of group fraud risk and investigation. I am presently on sabbatical. Thanks.
Thank you. And finally, Frederick.
So good morning, good afternoon, everyone. So I'm very honored actually to be part of this webinar with such high level of risk management professionals in the financial industry. Myself, I'm the head of growth at Cedaros. I have a background in diligence, especially in emerging markets, helping different types of companies, preventing fraud from happening. And for the ones who don't know actually Cedaros, we are a 25-year credit and compliance risk management solutions company, and with a willingness to build a bridge between emerging markets, especially the Middle East and the rest of the world. Thanks, Steve.
Thank you, everybody. Now, a little bit about our hosts, just in case you don't know them. Cedar Rose has been established since 1997, and they're right at the forefront of providing world-class business intelligence and credit risk solutions to leading companies in over 230 countries globally. They're known for their accuracy, reliability, and quality. They're specialized in offering a comprehensive array of credit risk, compliance, and data solutions, and they're the holder of the largest single database and information of companies, shareholders, and directors in the Middle East and North Africa region. Through their continuous innovation, investment, and development of talent and technology, their primary objective over the last 25 years has been to raise the quality of credit risk, compliance, and regulatory services in the MENA region to the highest possible international standards. They partner with their clients to help companies mitigate the regulatory, operational, and reputational risks associated with their business. And if you stay till the end of this seminar, you will have the chance to have a gift from them, a complimentary gift. So enjoy the webinar. And now I'll hand over to our esteemed guests to talk on 1 minute how they would define what good credit risk management process is and what the benefits it brings to an organization. So that's open to all of you. So who would like to take that question first, please?
I can start. I will go. So the most important, in my opinion, in a good risk management process is the strategic planification. As a financial organization, you need to look at all internal and external requirements and make sure you have designed all potential risk scenarios and responses. And the next important step after that would be to the communication within the organization with all employees and across departments, but also with your external stakeholders, whether they are clients, suppliers, or simply partners. In terms of benefits, I would mostly highlight it will help your organization prevent any financial or reputational losses arising from fraudulent activities, for example. That's what I believe.
Yeah, thank you.
I would just add, I think from my perspective, I think it's some good points raised by Frederick. I think good risk management practices is really about applying good judgment, applying knowledge, understanding exactly who the client base is, making an intimate sort of evaluation on exactly the risk that each client is presenting to the organization. And I think you only can do that depending on the product that you're offering the client. If it's a lending product, really trying to understand the business intimately, understand trends from a business model perspective, and then taking the various data points that you can, be it financial information, be it sort of processing information, to then really understand exactly how you can mitigate those sorts of risks. The way to do that, I think in sort of best practice is really working hand in hand with the client, being transparent in the communication, and internally also sort of applying the right tools and processes to make sure that you can do that seamlessly to enable the onboarding process.
Yes, thank you, Anselm. Next, please.
Let me go for this. There's a nice saying from Warren Buffett, right? Risk comes from not knowing what you are doing. Right? So it's all about factoring possible scenarios, evaluating, analyzing, and developing a business strategies according to that. I call this process idiot in the sense that I is identify the risk. You define the risk, you interpret what that risk means for your business, you organize to treat that business risk, and then you track that risk. The benefit, of course, is you can create an agile business that can respond to ever-changing ecosystem and create a resilient business model. Now, I'll just give an example. There's so much discussion going about recession in 2023. What does that mean for your business? What kind of stock volume do you hold? What should you look for in your credit policy? How do you reduce your bad debts? These are the kind of questions leaders today probably have to think about so that they can be ready for next year. Successful business is not about avoiding risks, it's about managing them effectively. I think risks and opportunities come in pairs. So it's a good time to grab that opportunity.
Yeah, thank you, Kali. And finally,
Yeah. So I would like to give an analogy. So one of my mentors, he used to call good risk management as something, if you compare it to an automobile safety system. So if you have a good braking mechanism, you have good quality airbags, you have all the best in class safety system around you, then you can go faster. And he would compare buying to say a Ferrari, that if you want to drive a Ferrari, you also need the safety equipment which comes with Ferrari. You cannot drive like a Ferrari without having safety equipment which comes with Ferrari. So I would say that is what risk management is about. The ability to stop, ability to navigate, and it protects business and the organization against unforeseen circumstances. Thanks.
Okay, thank you, everybody. But I agree with all of you, and the aim is maximizing sales while managing risk. And salespeople and the information they can gather is very, very important to us. And salespeople as well, I believe they should be trained in credit risk management and be aware that credit management nowadays is very commercially minded. They see credit management still as a cost center, not contributing to the profitability of the business. But credit management can be a very profitable area in its own right. And I believe it starts with salespeople.
Yeah, you're right, Steve. Actually, most of the information can come from the salesperson because they are the contact person of the new clients eventually. So the more they can bring to the organization, the better it's going to be for everyone.
Yeah, and the soft information they gather in the first place and the rumors they hear are very, very important with everything else we have at our disposal to mitigate risk. Okay. Charanjeet, this one's for you. In your experience, why is reliable data access critical to fraud prevention and detecting payment fraud?
Yeah. So again, I'll give another analogy. So it's like, a surgeon in an operation theater. While they are performing surgery, they need to know real-time statistics in terms of vitals, what is the BP level, what is the breathing level, what is the oxygen level in the room. If any of those elements are inaccurate or they are delayed, there's a lag. The surgeon, while he or she might be the best surgeon in world, but they'll not be able to perform their job properly if they don't get right data at right time. Any small mismatch in data could affect the outcome, despite you having the best of surgeon operating in the theater. Likewise, in risk management, if you don't get accurate data and you don't get it when you need it, then you will end up drawing wrong conclusions. You will end up making wrong decisions, which would have heavy cost on the business as well as on the organization.
Yes. Okay, this one's for Anselm and Pradeep. Thank you, Charanjeet. You've been providing financial service solutions to companies worldwide, including the Gulf Cooperation Council region. How would you compare access to business information and data in the region compared to the rest of the world? So, Anselm, if you can take that one first.
Yeah, sure. So I think making the comparison can be quite difficult, especially on a regional basis. I think if I look at the GCC, for example, there are certain strengths in the market. If I look at the UAE, for example, you have databases provided by the Ministry of Economy where you can validate certain points for companies. You have databases provided by the DED in Dubai. So those sorts of things can help. We know that the region is going through a maturation process. So I'm pretty upbeat about the fact that, in a few years, those points can be, or those solutions can be consolidated to give us a wide variety of data points. Now, if you compare it to another region, say Europe, I know in the UK, for example, you have solutions like Companies House where you have a consolidated viewpoint of companies in general. You can see financial information, you can see ownership information, you can see when the company started trading and so on and so forth. And if the company has certain financial points that needs to be pointed out. But the UK being very sophisticated in that regard doesn't necessarily spread to the entire region of Europe. There are certain countries in Europe where the access to data and information is still quite weak and developing. So it's difficult to make a sort of direct comparison. I think certain regions have the GCC region has certain strengths. It's going through a maturation process. Having that consolidated information is probably going to take a while for us to see. But I think there are strengths and weaknesses across the globe in general. Checkout.com works globally across a few different continents, and we see this on a daily basis. The key thing for us, we like to think of our clients as partners. So the key thing for us is really interacting with the partner to get the right data point and trying to ask them more about the business model so that we can make a good assessment. But looking at the data across regions, it's one that's very hard to compare. The UAE is doing very well, but you can't compare the UAE to, for example, Bahrain, where the speed of innovation or even the amount of companies being incorporated is not quite the same. So difficult to compare, but I think there are strengths and weaknesses if you look across all the different regions.
Yeah. Thank you, Anselm. Pradeep?
We keep evaluating, what kind of information do we need, the relevance of the information, and how do we get this information. We are data aggregators. We harness data from different sources, few directly from companies, few from the market, speaking from the industry people, and sometimes directly from the company sources. So globally, if you try and compare, there's certain regions where data is available at a click of a button. And US and Europe have a very robust data set. In Australia and New Zealand, you can do a search for a company in ASIC and get all the information. Even in Southeast Asia and Indian subcontinent, we have provisions where you can actually get information. The layers can be a bit brittle, but you will get information. Uh, well, as Asleem said, GCC is slightly fragmented in the way you can get information. Uh, in mainland, you probably can get information, but in free zones is extremely difficult. And to get financial information can be extremely challenging. So you really have to make sure that you have the right sources if you want to make a commercial decision about your business.
Yes, thank you. The right sources. I was involved in writing the scorecard for Europe, Middle East, and Asia for a very large computer company back in 2009. And I managed to persuade Middle East companies to provide financial information to the company, even management accounts. And it's the way you communicate with the companies. It's very, very vital. And communication, I believe, is the biggest single factor. Proper, good communication, negotiation to getting companies who don't have to file financial information to give you financial information. So thank you. Right, challenges, and this one's for you first of all, Frederick. Based on your experience, why is it a challenge for financial service organisations to access verified data in the GCC region?
It was already partially answered by Anselm and Pradeep as well. For me, the key explanation is the transparent access to publicly available corporate information in the region. Or I would say the lack of transparency and the information gap. Yes, in the UK, you have almost full transparency on corporate ownership, directorships, and the likes. There are still a few gaps that you can exploit as a fraudster, but it's already more than necessary for financial institutions in the UK to onboard companies seamlessly and avoid fraud. Obviously, like they mentioned already, the situation is completely different in the rest of the world, and especially the GCC. If we look at the UAE, for example, you have dozens of different jurisdictions. You have mainland jurisdictions, free zone, chamber of commerce, and so on. And there is almost no unity behind them. In some places, you can get a fair amount of information online. For others, you need to visit the registry deck in person. And for the last one, it's even full confidential. You cannot get anything from these ones. And the data is not equally structured. You have different data points, different languages. This region is going to be mostly Arabic and English, but it's not even standardized for that part. So it's very difficult to get these the expectations of the financial services organizations met. And I don't even want to highlight the challenges with regards to data updates as well. So how difficult do you think it is for banks and fintechs to seamlessly onboard new customers, especially in the digital world, right? Just one thing, and I will finish with this. There are obviously a few attempts made by financial service organizations to work together in order to access verified information. So we can mention, for example, in Dubai, the project led by Dubai DD with other jurisdictions in major banks to make corporate data accessible on the blockchain. There are also these project from its subsidiary UAE Trade Connect was developed a project on trade financing as well, and gathering also different banks for that purpose. But all of these are business case focused projects, and they do not provide all the minimum data requirements expected by financial service organizations in this region.
Okay, thank you. Charanjeet, you've been working for years in fraud and compliance risk positions in the UAE banking sector. Can you share with us, please, what the consequences of relying on inaccurate and incomplete and false data
Yeah.
are?
So relying on inaccurate data can lead to a reprimandation from regulators. So I have seen scenarios. I'll not name the employer, but we ended up providing incorrect data to regulator related to one of the reporting requirements. And while that time in a hurry, they submitted the data whatever was available without putting in usual conditions that it is based on this, or without rechecking the sources of data. And later on, when regulator started doing some inspections, they identified certain scenarios which were not covered in the data reported to them. So it basically leads to lack of confidence at regulators end while conducting audit of an entity, and it can have very severe implications. So that is one category of consequence. Second category is it could be internal. I have mostly worked in banks, so I'll give example of banking sector only. So say you are looking at your credit card related losses or payment fraud related losses, and you are only looking at losses incurred by the organization, but overlooking losses incurred by customers. That's a big mistake, because you are only seeing what is incurred as loss to your organization as of today, but any loss which is incurred by customers today, tomorrow it can become loss to the bank, because customer can go to court, customer can go to regulator, and today what is treated as loss to the customer, maybe due to payment fraud, tomorrow it can become bank's liability. So if you overlook such losses, you are basically being happy today saying I don't have losses, but you don't know what will happen 1 year down the line. We have seen cases wherein losses turn up after 4 years or after 3 years after a court ruling is made.
Okay, thank you. We have a question from the audience, a question from Roshni. What are such platforms in the UAE that give such data?
I can answer this question, but then I believe someone else can actually answer. So there are multiple jurisdictions in the UAE. So if you want information on a company registered in Dubai mainland, for example, you can get some of this information directly from Dubai DED. You can get some of this information online. You can get additional information if you visit the registry directly. Then if these companies are registered in different free zone organizations, then you need to get access to these different platforms at the same time. So if you want to DIFC, it's actually quite good in terms of transparency compared to other free zones in the Northern Emirates, for example. But just actually listing all of these different platforms is going to be very difficult because there are so many of them. Basically, you might also try to get the support of any companies willing to standardize and centralize all of these data eventually for you as well. But everything is publicly accessible, so anyone can search online for and find these different sources for themselves.
Right. The next question is this termed as consented? How do you solve the privacy issues around P11?
I can also maybe take that one. So basically, when we speak about corporate information, this is publicly accessible and publicly available, meaning that there is no issues related to privacy issues in this case, because all of the information that we will find on individuals, let's say shareholders, directors, are basically directly related to the company itself. So it's not actually considered privacy information in that case. So it's not going to be an issue. You will never find actually information on the phone number, date of birth, and this kind of personal information on this platform at the end of the day.
Okay, thank you. Anselm, again with challenges, considering some of the punitive actions that have been recently issued by the regulators in the UAE to companies who were found to be in violation of certain provisions of the UAE anti-money laundering law, what advice do you have for financial technology companies whose activities fall under the scope of these laws?
Yeah, it's a tricky one because I think I just alluded to it earlier. There are different jurisdictions in the UAE, and trying to understand exactly which jurisdiction actually regulates the particular activity that the financial technology company is sort of operating under can be a little bit difficult, especially as the regulation in a lot of these activities is new. So you see companies being incorporated with BIFC, where perhaps the central bank actually holds scope for that type of activity. You see we talk about crypto regulation, the virtual asset regulatory authority in the UAE, which are states trying now to sort of regulate that industry. So it can be difficult. I think the challenge for a lot of companies is knowing exactly which scope that they need to fall under. But in terms of practical advice that I could offer companies, when you're thinking about anti-money laundering laws, you can't. It's not a copy and paste exercise. Because a company operates in a different jurisdiction doesn't mean that you can sort of apply the same processes, procedures in the UAE. You have to start thinking about the sort of talent that you bring on board to monitor a lot of the clients, to perform a lot of the onboarding tasks, conducting the CDD. But I think probably for me, the most important thing is when you move into a jurisdiction like this, you have to start thinking about getting an independent auditor that comes in to actually assess your processes and procedure. Having a healthy relationship with the regulators is also extremely important. Having that dialogue to understand exactly what they're looking for, what points are very important from a regulatory perspective. And then once an organization starts maturing, one of the good things that they can do is actually to implement an internal audit department. An internal audit department that maybe on a biannual or on an annual basis is actually looking at the processes, testing the processes, testing, how they're, maybe providing a script and testing how they're onboarding and monitoring merchants to ensure that this is actually falling on the scope with the anti-money laundering laws. So there's a lot of things that companies have to do. First of all, I think from the onset you have to understand which regulator your activity actually falls under. Then having a dialogue or a healthy relationship with the regulators is important, so that you essentially eliminate a lot of the blind spots. And then beyond that, looking at independent auditors, creating an internal audit department. Those are sort of good practices that you can put in place to ensure that you're on top of any sort of violations that could potentially happen.
Thank you, Anselm. Frederick, again with challenges with the increased global competition, is there a risk for organisations to fall into a fraud trap, i.e. onboarding new fraudulent customers without conducting the comprehensive KYC powered by reliable corporate and operational data?
Short answer is yes, obviously. If I want to detail a bit, what I would say is that today you can witness there is an increased competition between traditional banks and fintechs, right? So these fintech companies, they come with an innovative and digital solution to a specific challenge faced by end users. And they are very good at what they do. But at the same time, they also need to move fast because today's competition is worldwide and they don't have a definitive footprint in the market like traditional banks have got for many years, right? So they will see worldwide competitors entering the market with lots of money, lots of investments, resources to onboard the same customers. So that's basically when they will fall into the fraud trap, in my opinion, because despite increased regulations from UAE and GCC authorities, for example, these fintechs don't always take the time today to properly conduct a thorough risk assessment on every customer, especially when verified data is difficult to access in this region, as we just discussed before, right? So why is that this situation? Because it means for these fintechs that the process will be very expensive or time consuming, and the competition will not wait during the same time. But eventually, these fintechs will also face the consequences as they will surely deal with sanctioned parties, non-paying customers, and the like. So they need to be very careful in placing compliance and risk management at the center of the onboarding process from day one. It will allow them to avoid fraud issues, fines by the authorities, or even repetition losses within their customer base, for example.
Thank you, Frederick. Moving on to best practices, we'll start with you, Pradeep. You're onboarding hundreds of new corporate customers on a weekly or monthly basis. Go beyond digital, the company you work for. Could you share the best practices you have implemented to prevent fraud and remain compliant? And how do you manage the access to reliable data on these corporate customers, please?
So KYC can be challenging, mainly because that's your first interaction with the brand, with your customers post sales, right? And all the checks, documents can create a frustrating experience for the customer. So you have to do this fine balancing of making sure you get the right information, but also do not frustrate the customer. So what we've done is we've developed something called a KYC maturity model. And our journey starts with the first step of trying to clearly identify what information do we need of the counterparty. We call that customer identification program. Once we have that, there's a clear communication with the counterparties, asking them to provide some of the information, and then making sure that we receive those documents. Now, that does not always happen. In theory, you want all the information, but not all the information you ask, you get. The third, of course, is once you have all the information, you do your due diligence, which is understanding customers' activity, who the ultimate beneficiary owner is, and the sources of fund. And then you do the sanction screening. And of course, the last part is to make sure that you do continuous monitoring to make sure the counterparty's status do not change in terms of sanctions. So the way what we have done is in the platform, we have designed the platform to manage KYC sanctions and providing financial data of counterparties within the application. So we have digitized the entire process. And the core goal is that our customers can have a smooth onboarding journey. So we aggregate data from different sources. We might receive information from some customers or counterparties. Then we revalidate those from external parties. We are dependent highly on technology. Technology is a key driver for us in terms of extracting information from various documents and cross-referencing the file. Therefore, by and large, to a large extent, KYC has become a play and plug for us. Obviously, we have manual people supporting whenever we have to do those extra checks and validations. Otherwise, it's a play and plug. And we enable that for our customers too by providing a 360 view of the counterparty. So in short, in the KYC maturity assessment improves, your customer onboarding journey improves. And the key challenge for probably every organization is how do you do that effectively and get most of the reliable data that you're looking for. And for us, as I said, the reliability comes from two aspects. One is a direct source of information, and two is sources from external parties and then cross-referencing it.
Okay, thank you, Pradeep. Anselm, again, best practices. Checkout.com is a leading company in the financial service industry worldwide. You're personally dealing with many underwriting requests. Can you share with the audience what process you have implemented to access reliable data on GCC companies to build trustworthy business relationships with?
Yes, certainly. So I think it's important to sort of preface this by explaining the type of customers that Checkout work with. So we typically work with enterprise-grade clients. So these are clients that are processing tens of millions of dollars annually. And even as you mentioned earlier, Steve, this process really starts, gaining that trust and gaining the reliability in data really starts from the salesperson, from the point in which they start prospecting the customer. So we try to ensure that that process is as smooth as possible. Our salespeople collect as much information as possible. But then beyond that point, when things come from an underwriting perspective, it's important to say that we are actually a tech-led company. So a lot of the processes that we have in place are really about integrating the right solutions to the platform to ensure that we're actually validating a lot of this information. And it's not just with one data source, but also with multiple data sources so that you can actually make a comparison across the board. You might have some data providers who potentially have out-of-date information. What you collect from the client maybe comes in contrast with what you see on the data provider. So making that comparison and actually get into the forefront of exactly what information you want to, what information is actually accurate, is part of that process. So for us, we have a few different values. One of the most important ones is really effectively communicating with the client. Making sure that we understand the business model, We assess things, as seamlessly as possible with, as few touch points as possible. But really, the be all of everything is really ensuring that we have a tech-led platform that collects this information, allows the underwriting analyst to assess the information as quickly as possible, and then from that point onwards, if we see any bone of contention, it's really about communicating with the client to get complete clarity. So for us, it seems like a long process in the back end, but once we get the information from the point in which the salesperson brings the client on board, everything really happens a lot more seamlessly. In terms of how we communicate with the client, in terms of how we interact with our tools, in terms of looking at the different data points. So that's how we work. For us, it's really about being tech enabled, being tech led, having multiple data providers that you can actually verify a lot of this information from, and then from that point onwards, you can make as accurate a decision as possible. And if it's a risky client, you make certain mitigation that you have to make. Looking at maybe clients who potentially we've just been through a pandemic, for example. You have certain industries that are potentially sort of vulnerable, and then you can make assessment, looking at the client, understanding the trends within those industries. And if the platform then suggests that maybe you take some sort of security from the clients in order to secure ourselves, then that's something that we do. But for us, it's really about being tech enabled, focusing on tools, and then effectively communicating the entire process with our clients.
Okay, thank you, Anselm. Charanjeet, again on best practices. What were the fraud risk management best practices you've helped implement during your leadership at the banks you've worked at? What would be your number one advice to the audience today to prevent fraud and remain compliant with this?
Thanks, Steve. So I would say in terms of best practices for fraud, the number one which comes to my mind is fraud risk should not be known as a unit which starts saying no, or which always say no to new initiatives, which says no to any innovative product or service. Rather, it should get known as a unit which adds value, which creates value to the business. Because the best way not to have any fraud is don't any business. You will never have any fraud. But that is not what one wants to do. You want to do business. You want an organization which grows. You want an organization which is known for innovation. So that's where I think fraud leadership, anti-fraud leadership, they need to realize that our job is not to say no or to stop innovation in its track. Rather, we should offer alternatives. That you want to do digital onboarding. These are the risks, these are the processes we can implement. So like other panel members discussed, there are a lot of data sources through which you need not visit the customer, you need not meet the customer, but you can do a lot of verifications and authentication digitally. So make use of that and make onboarding as much digital as possible. You would support business, you would support the organization. So that is point one. Don't be known for saying no, rather be somebody who adds value. Second is collaborate. So fraud risk teams usually would be one of the smallest teams in any risk unit in a organization. And still there are a lot of banks where they don't have any dedicated fraud risk team members. So if a fraud risk manager or leader, he or she believes that they can do everything on their own, that's wishful thinking. This can never be achieved. And there are not many lines between various control functions and businesses. So unless you collaborate, unless you leverage what is existing in the organization, you will never be able to prevent frauds in a holistic manner. For example, HR team, they onboard staff. So if you have a strong staff onboarding process, you can nip the fraud in its bud, right? You will not onboard fraudulent staff. Likewise, you onboard customers. So if your sales staff or sourcing staff or onboarding processes have inbuilt controls in place, then you don't have to review files physically, or you don't have to see every file to pick up fraud. You can do it as part of the process. Likewise, operations. Likewise, when a process is being designed, if you inbuild controls as part of that process itself, then half your job is done. So just to give an example, in UAE we have the Emirates ID validation available. So a person clicks a selfie and then you can do the validation with the EIDA server. and you get confirmation that this person is who he or she is saying to be. This person is in the country or outside the country. His or her visa is valid or no. So if you get so many validations done digitally, then what is the need to have additional verification processes in place? You can do everything start to end of the journey digitally.
Okay, thank
So
you.
that is my second point in terms of collaboration. And thirdly, leverage data. There are a lot of data points in our organization. One would be surprised if you start looking at data. So I'll give an example. We were looking at data of calls made out by different staff to different phone numbers, and there were some anomalies which stood out. So we saw certain staff members making a lot of phone calls to potential customers or existing customers, and then we looked at role of those staff. So while most of them were sales staff, but then we saw some credit staff making a lot of calls to potential customers or existing customers. We wanted to understand more about it. So we heard the call recordings, and it came out they were negotiating with customers to take bribes to approve their facilities. Now there is no logical reason for a credit staff to make so many calls to sales to customers. A sales guy making calls to customer is justifiable, it is logical, but there is no need for a credit staff to make calls to potential or existing customers. And that came out when we started leveraging data existing in the organization. So these are the points I wanted to share in terms of best practices.
Thank you. Thank you. We need to hurry on because we've only got 10 minutes left. So if you can be very quick with the alternatives. Frederick first, I believe the audience starts realizing the risks of non-compliance with their business when working with customers and suppliers, that they might not have a clear process in place. How can they access reliable business data on companies? And can they conduct this activity alone without any external support, please? I can't hear you, Frederick.
Frederick, you are muted.
You're muted.
No, I'm unmuted. Sorry for this. So yeah, I was saying, yes, it's very much possible. Any organizations can use their internal resources to identify, collect, translate, transliterate, standardize, process, and make reliable data available to the procurement or compliance departments. And the vast majority of this data is publicly accessible, either online or in person. So the easiest way for any organizations would be to identify all the registration jurisdiction in all the countries the third parties are registered, without forgetting, like someone else actually mentioned just before, that you are not looking only at this entity, but you are also looking at the shareholders, the UBOs as well, and where they are registered, these specific actors. So, but they can do this, all of this alone? Yes, internally, yes. But the same as you can paint your house, you can clean your car, you can invest your savings in the financial markets yourself alone without any external support. But what would you request actually such external support for these activities? And most of the time it's because either we don't have the knowledge, we don't have the resources, we don't have the time to do so, or simply because we know it's going to be faster, more efficient, and cost effective to rely on an expert to provide you with a service, right? So we have seen ourselves numerous companies insourcing these activities, and they do very well. Others, they just prefer to keep their focus and expertise on their business, what they do the best, and they would prefer to outsource some of these risk management activities to expert service providers. Just an example, as well as I wanted to highlight. At Ceros, we currently discuss with a few UAE banks to fasten their onboarding process. Specifically, a bank will onboard mostly around 5 to 1,000 individual customers for their credit card solutions. And before approving these new customers, they ask them for employment information and evidence, because you need to verify if these employing companies really exist and are active at the same time. Otherwise, you are simply vulnerable to fraud, right? So when you have such volume of new customers per month, does it make sense for a bank to invest time, effort, and resources internally to access this data from 40 different jurisdictions in the UAE, for example, while they can simply get the same service at a fraction of the cost and more efficiently from someone else? So just asking the question in this sense.
Okay, thank you. Now, very, very quickly, Anselm and Pradeep. In the UAE and GCC regions, it's difficult to get business information verified. So what are some of the alternatives you've implemented to overcome these challenges? And I'm going to try and limit you to 30 seconds each, please. So
sure. I'll go first as quickly as possible. I think there's a couple things. So firstly, on financial statements, if you're looking at financial statements, I think you have to try and understand the type of companies that you're dealing with. Certain companies don't necessarily pose, or certain businesses that operate in certain activities don't necessarily pose the same level of risk. So, for example, in payments, one of the riskiest industries you can onboard is a travel company or any company dealing in future services in general. So those types of companies, you want to sort out financial statements, and you actually probably want to interact with the company for them to provide that sort of information. But if you're dealing with, say, a multinational retailer that delivers a good within the same day or within the next day, that's not a company that you necessarily want to collect financial statements from, because the risk just isn't quite the same. So you have to make that determination from a UBO perspective. Really, without public data, the only alternative is really making sure that you have a good relationship with the clients in order to actually
Absolutely.
just collect that information there.
Absolutely. Okay, thank you. Relationship building. Pradeep, again.
Yeah. So, we've designed a platform in such a way that you can invite your counterparties to the platform, and then the counterparties can directly upload information, trade license, and UBO information into the platform. Now, that's one part. Whether customers or companies would actually part with UBO is always a challenge. And UBO information and financial information is definitely a challenge in GCC. Just to cut it in 30 seconds, we rely a lot on third-party data providers to cross-reference whatever information that we get.
Thank you. Right. Now, last words. If you had one last piece of advice to offer to the audience to help them prevent fraud and remain compliant when onboarding corporate customers, what would you tell them? And I'll start with Frederick.
Okay, so I'm not on mute, that's good. So my advice would be don't bet on the future. I would say prevention is always better than the cure, especially as we have seen all the recent fines imposed by UAE and GCC authorities on organizations not adhering to the compliance regulations. So that'd be my advice. Prevention is the best way forward.
Thank you, Pradeep.
I'll just put some numbers behind this, right? The financial crime is estimated to be by UN at around $800 billion to $2 trillion worldwide per year. Now, that's massive, right? And it becomes important for organizations to manage the KYC, data, and cybersecurity. And you can only do that by making sure that you have the right framework in place. It helps to reduce financial risks of business, making sure that we have information from your counterparties. Key would be to have a robust KYC process, strong internal controls, adequate monitoring. That's said, the more consistent documentation. I think that's very, very important. And a lot of times, a lot of organizations fail to do that, is to make sure that the employees are trained to understand what financial fraud is about. Bankings do, but rest don't do. So I would educate also companies to look at how technology can help you in this area.
Okay, Pradeep, thank you. Anselm, quickly.
Yeah, so it's really just reiterating a lot of the things that I mentioned earlier. My best practice, I would say, best things to do here, best advice is communicate effectively with clients. Make sure that you're bringing them along within the process and they understand exactly why you're asking for certain information. You have to ensure that you have the knowledge and you apply the knowledge in good judgment. Making sure that you're abreast and every single member of the organization is abreast with the regulation and the processes and what's actually required from a regulatory perspective, and making good judgment throughout the process. The one thing that I always tell my teams is to take ownership. Making sure that you exactly like Frederick mentioned, don't bet on the future. Making sure that you make sure that whatever is happening, you take the appropriate measures to actually ensure that you're preventing or mitigating whatever risk that you sort of see. And if you're an organization like us that's dealing with tons of requests on a daily, weekly basis, ensuring that you apply technology to act with urgency and solve problems. That's really my advice.
Thank you. Charanjeet, finally.
Yeah.
Quickly, please.
So two things I'll say. One is the importance should be highlighted to the team who's onboarding customers, that why it is important and what are the consequences if we don't do it properly. And two, when dealing with corporate customers specifically, we need to look at all entities that Frederick also mentioned, not just the company owners, but maybe subsidiary companies. And we have seen cases wherein they give power of attorney to non-related persons. So you would have everybody clean, but you don't check on power of attorney holder. You don't do KYC on POA holder. That may be a listed criminal, and you won't know because you don't run KYC on POA holders, which are added later on to the account. Thanks.
Okay. Thank you. Fraud, we'll never get rid of it. The first reading I did regarding fraud related to the £5 note, which was introduced by the Bank of England in 1793. Within 20 years of the £5 note being introduced, 842 people were convicted of copying it. So imagine how many more must have been copying it in those days and getting away with it. So fraud will always be with us. Don't let it put you off dealing with people. Communication is the key. Thank you. Thank you, everybody, and hope you enjoyed the webinar, and thank you to Cedar Rose for putting it on.
Thanks a lot, Steve. Thanks a lot, everyone, for making actually. Thanks a lot. Enjoyed it.
Thank you.